Hey all, welcome to ShareTreck. It's the 12th of May 2022 and it's a fantastic day out there. I can see from my window bright sunshine. It's a beautiful day for a walk, but I can't say the same about our stock market. The futures are not looking good. The question in most of our minds is what happens next? Have we reached the bottom? And post the CPI news, which showed higher inflation, what's going to happen in the market? Basically, we are looking for a roadmap. So let's do exactly that. Let's get started with our daily update. Let's get started with our headlines. The first headline I have today comes from Morningstar. The Morningstar analysts feel that growth stocks are now undervalued and defensives are overvalued. And they're also looking at another trend, that is the discrepancy between the services growth and the goods growth. Because during the pandemic, the services got shut down. So all the focus shifted to buying goods and performing the services by self at home. So with the opening up of the economy post-pandemic, there should be a good increase in services growth, and that's what this diagram talks about. I'm going to take you to the actual article. I have put the link in the description below, and you can check that out yourself. So here is the article from Morningstar. I recommend strongly that all of you have a look at it. It's a very good resource, Morningstar. Check out this article. It says the 2022 sell-off has left the US market, stock market, undervalued. And it's a very, very detailed article. And they're looking at the valuations, and they're saying very succinctly saying the reasons why stocks have fallen: declining economic growth, Federal Reserve tightening monetary policy, rising interest rate, and inflation. And now within that inflation, there is a lot of subgroups. War, there is the China's zero COVID policy, which is cramping the supply chain. So oil and supply chain gets plugged into the inflation. So it's a very succinct article, very broad-based, and this is where, and they're also talking about specific companies that they think are unvalued in each of the sectors that they're discussing about. And this is the chart that I had produced for us because this caught my interest. So companies that are in the service sector are likely to grow more. Already you have seen a good deal of inflation in the April report came from airline travel. So it's a kind of expenditure that's more in the service side, and it has contributed to more of the inflation. So you can look at the companies that they have picked up here: Caesars Entertainment, Starbucks, TripAdvisor, Carnival Group, Sabre Corporation. So it's a very nice article, and I think it's worth a good read. When you have some time, grab a cup of coffee, sit down and read the article, and you'll really appreciate that. And the other headline I have is coming from CNN Money. They have this fear and greed index, which is showing extreme fear. And I'm going to show you the fear and greed index here. So it is at 19 right now and shows extreme fear. In order to understand this fear and greed index, we need to get into the CNN Money website. And when you look at the CNN Money website, you will find that they have more details. Each of the components that goes into calculating the fear and greed index has been shown separately. Market momentum, extreme fear, S&P 500, 125-day moving average, and they show how S&P 500 has fallen. Then they're looking at stock price strength, net new 52-week highs and lows. So the lows are more than highs. So we are at the very bottom. This again shows extreme fear. Stock price breadth, and this is talking about extreme greed. And put and call option, the one that we see PCC on a regular basis, it's above 1. So it's a bearish scenario. So that's what they're looking at. Again, VIX, they're looking at VIX here, and junk bond demand. So overall, they have come up with this fear and greed index. It's also, the link is in the description below. You can check it out at your own leisure, revisit that in future times to look at what it's looking like. If we see any improvement in the fear gauge out here, And if we go somewhere closer to neutral, we can start seeing the foundation of a bull market coming in. And after that, it's going to be an upward trajectory. So with that said, our next item of news is that main fear, it seems to me, for most people in the market is whether the Fed is going to be able to do a smooth landing. A smooth landing means we are going to keep on raising interest rates very carefully, and we are going to carefully monitor how the market responds, and we're going to stop our rate hikes exactly at the right time so that the unemployment does not go up and so that our quarterly GDP doesn't fall down. But by the very nature of the Fed's activity to bring down inflation, they have to destroy demand. When the demand is destroyed, production capacities are going to have less margin. Therefore, they're going to let go of people. They're going to reduce their producing capacity in order to meet the change in the market demand. So it's anyway going to bring down employment. It's going to bring down the GDP along with it. So it's a very, very delicate dance. And it could either lead to recession or it could lead to stagflation. The main fear for the general public at this point of time that is investing is whether the Fed is going to be able to do exact monitoring and make sure that we don't get into a stagflation, which is a period when slow economic growth and joblessness coincide with rising inflation, which is a worst case scenario, or recession, when employment also falls, inflation also falls, and the GDP keeps on shrinking. That is recession. So it's a higher breadth away from stagflation, because if the Russia-Ukraine crisis continues and if the European embargo on Russian oil continues, then in the past, embargoes on oil have led to stagflation. So the fear of getting into stagflation will come in, because whether you need it or not, you have to have salt in your food. Whether you need it or not, we need oil to make sure all the machineries run for even mundane things like the train that takes you from one place to another, or the car that takes you from one place to another. Because in most of the economies, car is no longer a luxury, it's an essential. So transportation systems for food and everything is again table stakes for any economy. And the high price of oil due to embargoes can continue to persist despite the fact that demand is falling, because people can't sell oil less than that price. It involves transporting, refining, and everything. So that's how you get into a stagflation environment. So that fear is also there. So those are the twin fears that are pushing the market into the situation that it's in right now. Let's now turn to CRISPR news. Scientists at Kumamoto University developed the 5th generation multi-step transformable amino PRX carrier that could precisely and efficiently deliver Cas9 RNP into the cell nucleus. They're calling it the 5th generation because while they were developing this carrier, they had to go through multiple iterations. I think there were 5 iterations, each iteration progressing successfully into the next level into the cell until they were able to go all the way to deliver CRISPR-Cas9 into the cell nucleus to do its job. And having done that, this is the most precise and efficient method that is available right now. This is definitely going to have a good impact on all the pipeline items that are going on in various genomic companies, and is one more tool that will enhance their ability to do their editing in a more predictable and safe manner. So I think this is a great development. In my personal opinion, I think the markets will remain range-bound and volatile on finding bottoms until the risks abate. So when we go to look at the Nasdaq and other indices, that's the point of time at which I'm going to talk to you about what the map would look like, the graph would look like when we get into a situation when we have touched the bottom and the risks are still in play. So I'll talk about that in a subsequent slide. Now let us take a look at the heat map. So if you look at the heat map out here, you will see that Microsoft has lost 3.32 yesterday. Apple has lost all across the place. It's a sea of red. The only place where you see green is in energies. Now, if we were to convert this into a 1-week performance, you would see everything is red. So we are kind of coming out of the red in a way, but it's not going to be very pronounced because the movers of the index are big companies like Apple, Microsoft, Google, Facebook, Amazon, Tesla. Those companies are in the red, as you see in the most recent one-day performance. So the index is not going to be impacted, but I see some green shoots out there. So potentially we are very close to the bottom, and that makes me feel much more optimistic that we have left the worst behind us. I could be wrong, but I start seeing a little bit of greens out here. Of course, whenever we are heading into a recession or situations like that, stock market is going to flee towards energy and utilities. So that's also another thing that we have to keep in mind. But I think that having fallen almost more than 20% on Nasdaq, I think we would have probably scratched the bottom. As always, I'm going to start with futures. Nasdaq futures out here, NQ shows a drop of minus 1.42%. That's around 170 basis point. That's a significant number, which indicates to me that the futures are looking bearish. Now let's go and look at indicators. And in indicators, I'm going to start off with US oil first. US oil has dropped 1.43%. And we have this candle. All these candles are 2-hour candles. Just going to change that into a 1 day so that we can see today's candle. Today's candle started just about where yesterday ended, and it has fallen down since, and it has fallen below the 9-day and the 20-day exponential moving average. So that's a good sign for us. It's fallen below the 9-day exponential moving average and not the 20-day exponential moving average as yet. So we still have support from the 20-day exponential moving average. And if you look at the MACD, it's turned bearish, and momentum is also just at average and pointed downwards. So I think oil is likely to fall further, which is a positive indicator for the market. So that's one positive sign we have here. Next, I would like to go and have a look at put-call ratio. Put-call ratio is 1.16. That is again bearish. So we have one positive and one negative indicator today. And if I go into the VIX, which is a daily VIX, today is the 12th of May, and this green candle is today's candle. It's gone. It's being supported by 33.77. It's above where we ended yesterday. Yesterday was a doji candle, and it was generally red, but it bounced off the 9-day exponential moving average. So VIX is high. So now we have two negative indicators and one positive indicator. And if we go to the US dollar index is going up. And as I mentioned earlier, when the US dollar index goes up, that means funds are flowing into the US dollars, and the funds are coming out of stock market, gold, and other places. So this is now three negative indicators and one positive indicator so far for us. If you look at the yields are dropping. Yields dropping are good, but they are still at an elevated level. So 6-month yield has dropped, 2-year yield has dropped, and 10-year yield has dropped. So we have got 2 positives and 3 negatives so far in what we have seen. Let us go and look at QQQ. QQQ is real time out here. So pre-market it is down 1.58%. So I wouldn't count that extra because we already counted them in our 3 negatives before. So we got 3 negatives and 2 positives, which are likely to change when the market opens. So in balance, I think we are in bearish territory. If we look at the QQQ, it's the MACD is absolutely bearish, moving away from the signal line. Momentum is also below average and tending towards the 30% mark. So it's not looking good here. And if we zoom out further, we have a line of support, this diagonal line of support, which should hold us because it has had multiple points. So that's the next destination for our QQQ index here, which aims that it should be at 283.09 if it attains that target. If I look at the S&P 500, which is denoted by the SPY index, you can see that we are still respecting this diagonal line, which we straddled once, but we are still below that. And this is a candle for 11th of May, We do not have a candle for today because this is not real-time SPY. So S&P 500 is also struggling to break through a resistance. So we have to look at that. And if we zoom out further, we can see that we have dropped significantly on the S&P 500. I'm going to pick up a scale. I'm going to go to the top and then draw our way to the bottom. So we have had a fall of around 17.69%. So if you have a 20% drop, then you could say that one is in a bear market. So there is still a little way to go for S&P 500 before it gets into the bear market. If I look at Nasdaq, and if I use the same widget and see how much we have dropped from our peak. So if we come here, we have dropped around 27%. So I'm going to take this here. I'm going to ignore the bottom of this candle. I'm going to ignore the bottom. I'm going to go right up to here. So it's 27.83. So I think that in terms of Nasdaq, maybe Morningstar is right. We have reached a stage with growth companies where it's time to have some pickings. So there could be a turnaround anytime soon, in my opinion. We'll have to wait and see what happens. But the turnaround is not going to be like a straight bull trajectory. It's most likely to be consolidation and prevention of further sharp falls. So as you can see, these falls have been very sharp. Now let me take a trend line. Let me draw a trend line on our way down from there to here. If I look at the length out here, I can see that we are almost there on the second leg. So I could, using this this hypothesis, imagine that we are likely to stop falling down any further, and probably we might consolidate sideways. Let me take a pen out here, a brush, and maybe we'll have a trajectory something like this, where we need to find the upper bound. What is going to be the upper bound? And then we need to find the lower bound. What is going to be the lower bound? And the lower bound will be the support. And we are likely to go on like this, in my opinion, until we have the CPI starting to show something good. When something good comes up in the CPI, then we are likely to get into the next level. And then that could look something like this, where we have a red channel here, and then we continue going the same way. We move between these until we get another good news, which is that China COVID issues have sorted out, supply chain has improved, in which case you can get the idea. We move to the next level. And that's how I'm expecting that by the third quarter, we are going to be in a place where we have a foundation for a bull run to begin. So that's my thought process. So in reality, if I was to do based on the time scale, these channels would look much smaller, and maybe it might look something like this. So this is my idea of a blueprint of how the market is going to behave going forward. And if you look at the overall scheme of things, I think that we will start consolidating now, and then with the next good news, we'll consolidate at a next higher level. And by the time this is over, we'll be ready for a bull run in which during which we'll be taking off the peak of the previous bull run, which was at 16,587 points. So that's how I'm looking at the whole blueprint. With that, let's go and have a look at our Genomic shares. So here we have our Genomics shares in our watch list on the right of the panel. And we can see that Bluebird is at the very top as the biggest loser from yesterday, followed by Verve. Verve also had earnings come up, and the earnings were decent. Apart from that, if you look at CRISPR Therapeutics, it's been just trying to stay above this support here of 44.27. And I can see that today pre-market, it's already down 42.08. So this support is also going away. I'll mark this red for now, and it's going to become a resistance. When it comes to CRISPR, I think the market is overreacting, basically because of fear all around. all these expenses and drop in EPS as well as revenue, I don't think it's anything wrong. The company is doing all the right things. I'm still bullish on CRISPR, so I'll leave it there. Caribou Biosciences also lost 9% yesterday, and by the looks of the MACD, it's not looking great today either. Beam also lost around 16% yesterday. And again, MACD and momentum, everything is indicating horrible situation. Pre-market also, it's down 1.06%. Let us check pre-market, what's happening with Bluebird. Bluebird is down 1.56 pre-market. Verve is down 1.12 pre-market. CRISPR is down 3.63 pre-market. Caribou down 4.83 pre-market. Beam down 1.60 pre-market. Everything is looking terrible out there. Illumina closed at 213, but pre-market there has been no trades. PSCB is flat pre-market. Novartis is up pre-market marginally. DNA is down 1.82. Editas is down 2.39. Pfizer is down 1.21%. Vertex doesn't have any trades. Regeneron doesn't have any trades. IDNA has no trades but has lost 6.13. So overall, Genomics has gone down 6.13. Let's take a closer look at IDNA. We can see that we have broken down below the line of support that I have drawn yesterday. Rather, I'll keep it because we'll bounce back on it again on our way back. But we are falling heavily. Now I need to draw another line out here, which could potentially show us what is the next support. So I think I would hazard the support out here very roughly. This could be our next support, and this is going to be at 23.72. So there is a steep fall at 23.72, and there could also be a potentially another support out here at 24.86. So I would say that 24.86 is the next support. All the exponential moving averages are above the price. So this is a very, very weak situation for the genomic stocks, as indicated by IDNA, which is the ETF that tracks genomics. So with that, I would like to bring this session to an end. Just to summarize, we got more bearish indicators than bullish indicators. So that indicates that the market is going to be red today. We should also keep in mind that when we look at the MACD for most of the indices, so let us just go to an indice. Let us look at QQQ. When you look at the MACD, it's already at the very bottom, as low as it has ever been in a very long time. So that indicates that most market participants are going to interpret that, especially for Nasdaq with a drop of around 27% and MACD being where it is, people are going to assume that the bottom has been reached, in which case there will be selective buying, which will lead the market slowly towards the consolidation phase, as I described before in my Nasdaq analysis. So we'll move range bound in a consolidating pattern, and in a couple of weeks we'll be able to find the higher and lower extremes of that range bound movements. So potentially it could be a range bound movement starting here, and today we start going up a little bit, then hit against the resistance at this red line out here, which is at 302.95, and then we drop back down again. So wherever we have lower lows and wherever we have higher highs, we'll draw a line connecting them. If it happens to be a line which is parallel to each other, then and moving sideways, then it's consolidation in progress. It could also be a gradual bull line where it's moving very gradually upwards, but all the while going up and coming down, going up and coming down, and so on. So that's the way I see the market evolving from here. So be careful out there. Have a great day. And if you like this video, please don't forget to put a like there. And if you haven't subscribed, please subscribe for everything CRISPR. Thanks and have a great day. Bye for now.